Hi, this is James Shug with Westpac's end of market day report for Thursday the 22nd of March. Well, it was a case of weak economic data right around the globe today, over the last 24 hours or so. We had the soft Westpac ACCI Industrial Trends Survey in Australia. We had the weak GDP numbers in New Zealand. And then what really worried markets, of course, was the flash PMI for March for China, which I think was the weakest since November, suggesting that the manufacturing sector there continues to unwind previous strength. And that was followed up by news that in Europe, various country PMIs were softer than expected, and indeed the composite manufacturing and services advanced PMI for March for Euroland fell from 49.3 to 48.7, reflecting both lower factory and services PMI outcomes. So in February and March, we've now seen most of the January spike in the European PMI reversed. And it was that spike that fueled, at least for a while, hopes that Europe might avoid a recession in the immediate past period. We know that GDP growth contracted at the end of 2011, but that spike in the PMI in January suggested that maybe things might have stabilised. It's now looking more likely that things haven't stabilised. On top of that, we had a sharp fall in industrial orders. They were down 2.3% in January. That's European order figures. And in the UK, retail sales were especially weak. Not just in February, when they fell 0.9%, but also the January numbers were revised down sharply. A 0.9% rise was cut back to just 0.3%. So the overall picture of economic data really up until the mid-morning in the European session was very soft. And all of that conspired to pull European equities down quite sharply from the open. Things picked up a little bit in the US. Initial jobless claims, a weekly measure of the number of workers being laid off in the States, fell below 350,000 for the first time in 4 years. They've been recently hovering just above the 350,000 level, but now you can say that they're actually hovering around 350,000. So that's another piece of evidence suggesting that there's an element of sustainability to the recent improvement in the US labour market numbers. That's probably about it in terms of key economic data. The weak numbers certainly outpaced or outweighed the jobless claims in the US in terms of market impact, with the FTSE in London just heading into the close down 0.9%, the French market down 1.6%, the Germans off 1.25%, the Spanish down 1.6%, and the Italians also down 1.6%. Heading into the New York lunchtime, the Dow in the US was down just over 0.5% at 13,054. In the commodity markets, mostly negative there. Looking at, for example, copper prices down 2.3%, a 2.2% loss for oil prices, and gold off about 0.75% today at $1,638 an ounce. The oil price, for those who want it, $104.90. The Aussie dollar, it's kept slipping. It's down against the euro, down against the US dollar. Against the euro, it's at 0.7868. That's the weakest, I think, since pretty much New Year. And against the US dollar, 1.0378. So clearly below 1.04 now against the US dollar. So that's about it, really. Mostly soft economic data asserting itself via weaker stock markets, softer commodity markets, and weaker currencies like the Aussie dollar. Okay, I'll be back with more tomorrow.